All right, so we are Group 1, and we chose to do our presentation on the Bayer-Monsanto acquisition. So a little background about Bayer. So Bayer was founded in Barmen, Germany in 1863 by Friedrich Bayer and Johann Friedrich Westcott. It is a chemical and pharmaceutical giant. So they have three core business divisions. They have Bayer Healthcare, which focuses on drugs, medical devices, and diagnostic equipment. They have Bayer Material Science, which focuses on polymers and plastics, and then Bayer Crop Science, which focuses on genetically modified crops and agrochemicals. So then a little background about Monsanto. Monsanto was founded by John Francis Queeny, who was married to Olga Mendez Monsanto in the United States. The company's first product was chemical saccharin, which was sold to Coca-Cola as an artificial sweetener. So Monsanto expanded into industrial chemicals and drugs and became the largest maker of aspirin in the 1920s. And then in the 1930s, Monsanto created the first hybrid seed corn and expanded to detergents, soaps, industrial cleaning products, and synthetic rubbers and plastics. Before the acquisition, Monsanto was the leading supplier of herbicides and seeds and led the world market for genetically modified seed, particularly corn, soybeans, and cotton. So they also made the leading brand of herbicide called Roundup. So in 1997, Monsanto spun off its chemical business and named it Pharmaca Corporation. So Monsanto at that time became just the Monsanto company, and it was strictly an agricultural business. So what is the transaction? So this transaction was announced in September of 2016 when they announced that Bayer planned to acquire Monsanto. So the acquisition wasn't approved by the Justice Department until May of 2018. In order to stay in compliance with U.S. antitrust laws, the companies agreed to spin off $9 billion in assets, which was the largest sale of corporate assets ever required by the Justice Department. So in this settlement, Bayer sold its seed and herbicide business to a third party. It was a German chemical company called BASF. Bayer also sold its digital farming business and a variety of intellectual property and R&D projects. So the spin-offs were aimed at preventing Bayer and Monsanto from using their combined control over seeds and seed treatments to raise the price of agricultural products to farmers and consumers. So Bayer and Monsanto have historically dominated the global trade in seeds and agrochemicals. So the acquisition would eliminate a direct competitor in some lines of that business. So Bayer would have gained an anti-competitive leverage in that market, according to the Justice Department. So this was a $66 million merger, and it had to receive approval from regulators in the EU, Russia, Brazil, and the United States. So it was a big deal, and they definitely took a lot into consideration when deciding if it would be accepted. All right, so why was this even an idea? Why did they want to do this? So Bayer announced that it would acquire Monsanto, and the main reason was to boost their agricultural research and innovation. The merger would end up doubling the size of Bayer's farm business. Another big reason is to get away from the bad press Monsanto brand has accumulated. This would be due to legal claims about Roundup causing cancer. So Monsanto has a history of controversy with farmers and popularizing genetically modified seeds as well. So in order to get away from the bad rep, Monsanto will now be under the name Bayer, completely getting away from the negative reaction to the brand name. Another reason for the transaction is that the two industries are very connected. So Bayer is an agricultural chemical company dealing with pesticides and herbicides, while Monsanto deals with genetically modified plants and pesticides. So pretty much, genetically modified plants are helping the environment because they are engineered to resist insects, thus making the pesticides and insecticides less necessary. So because farmers don't have to use pesticides, the sales are going down. That's a bad thing for a company like Bayer until they acquire a company like Monsanto. Herbicide use has gone up with the introduction of genetically modified plants. So, as of 2011, Bayer controlled 17% of the global pesticide market, and Monsanto controlled 26% of the global seed market. This means that Bayer can be a part of the genetically modified plant industry that is increasing the use of herbicide. So, this can improve revenues for both companies and overall improve both companies. The final way Bayer defends the deal is saying it's the surest way to increase agricultural productivity, especially as the population grows, citing Monsanto's advantage in plant genetics and Bayer's portfolio of pesticides and other chemicals. All right, so major risks involved that were taken into consideration when deciding if this was a good idea. So before the merger was completed, there was pending litigation against Monsanto. The lawsuits were settled after the merger was completed, ultimately naming Bayer as two losing lawsuits from Monsanto's product. So Bayer took on that responsibility by acquiring Monsanto. And these were not small deals. One award was $289 million. So apparently there are still many more cases regarding Roundup causing cancer. Um, one article said 13,400 open cases still remain. And with one award being $289 million, this would cause a lot of liabilities. So it will be up to Bayer to settle these in court, and it will cost a lot of money. We know from financial reporting that companies have time to prepare and report on pending litigation, but these are a lot of cases and not small cases. So another risk they had to take into consideration, Bayer had to make multiple offers to Monsanto before Monsanto agreed. Each time Monsanto's price had increased due to rapidly consolidating agriculture industry. Monsanto finally agreed in September of 2016, and that was to an all-cash $66 billion deal with a 44% premium and a $2 billion breakup fee. The deal proved difficult to approve in Germany and US. Finally, after 2 years, US regulators approved this merger, but only after Bayer had to sell off $9 billion in assets, which resulted in 12,000 jobs lost and a loss of $30 million a year due to divestitures. Another major risk involved in this acquisition is the removal of competition in the farming industry. So other mergers in the industry were also occurring at the same time, and that put pressure on these companies to merge despite all of the risks that they saw. This could lead to a faulty acquisition and a failure. This decrease in competition could increase prices for vegetable seeds. It would also mean that one company would control a majority of farming data, and removing the possibility of improvements in technology and processes, because the less people with the data, the less progress there is. So there are also many financial risks involved. Overall, revenues may decrease for Bayer due to the bad publicity from Monsanto. Consumers may choose to use other producers just based on the Monsanto name. There's also the risk of increased liabilities due to all of the legal claims Bayer will absorb. Also, in approving this acquisition, Bayer had to sell off $9 billion in assets, like we've said. Due to this, Bayer may have a lack of liquidity, meaning they may struggle to liquidate cash in order to pay off those liabilities. And if those liabilities increase, that could cause bankruptcy or major issues. Another risk financially is the impact on share price. It was said that the share price decreased by 40% once the acquisition occurred. Because of this, shareholders began to have a lack of faith in management to boost sales to push the share price back up. The stock price also decreased by 50% because it became less appealing. Foreign exchange rates also may have a complicated impact on the financials. So foreign exchange rates would make it complicated to record transactions related to this acquisition because the euro is the currency Bayer uses to record transaction, while Monsanto is in the US, so dollars. They would have to calculate and convert the value of each transaction, and over the years that may become difficult due to applicable gains or loss as exchange rates fluctuate. All in all, Bayer's total worth now is only $63 million compared to the $66 million Bayer paid to acquire Monsanto. And that's $63 million total, not just Bayer. That would be for both, compared to 66 just for Monsanto. It did have a very negative effect on Bayer's success. Right, so a big line item on the financial statements that was affected by the acquisition of Monsanto was financial liabilities in the consolidated statement of financial position. There is a $25,000 in millions difference from 2017 to 2018. In a footnote about the financial liabilities, it says this has to do with the acquisition of Monsanto and the cost to finance the transaction. Bayer had to issue bonds to help finance the transaction, as well as take over bonds from Monsanto. Also, in the consolidated statement of cash flows, two big line items that were affected are cash outflows for acquisitions less acquired cash in the investing activities, and then issuances of debt in the financing activities. Both line items are thousands of $1 million higher than the previous year due to the acquisition of Monsanto. This caused the cash and cash equivalents to be lower than the previous year. And of course, income would definitely be affected, but specifically mentioned in the notes to the income statement, miscellaneous financial expenses included 124 million euros. In 2017, it was 210 million euros. In commitment fees and other fees related to the syndicated bank financing for the acquisition of Monsanto. Also, not unexpectedly, cash flows were affected by the purchase and subsequent divestments with an outflow of 45,290 million euros and only an inflow of 9,948 million euros under investing activities. So it definitely had a negative impact on their financials. They had an insane increase in liabilities and a major difference in their cash flows. Their outflows were exponential compared to their minimal inflows. So their cash and cash equivalents decreased, making it even harder to pay off those increased liabilities. So overall, this transaction was not the best decision for Bayer, and it had a lot of negative impacts. All right, so here are our works cited, all the sources we used, and thank you for listening.